Hey guys, welcome. Today, we're going to discuss an oh-so-talked-about stock in the technology sector, MicroVision, better known by its stock ticker MVIS. In this video, we're going to go over what MicroVision does, why it's important for a whole host of companies, but mainly self-driving vehicles, some of the recent actions the company has taken that have gotten a lot of attention from investors, the overall market MicroVision is operating in, and how that's affecting its stock price, and also, my thoughts on why this is such a solid buy. If you like what you see, remember to smash that like button, subscribe, and ring the bell so you never miss out on a future video. Now let's get into it. MicroVision is a tech company that focuses on developing laser scanning technology for a wide array of uses. These uses include augmented reality, virtual reality, and most importantly, self-driving vehicles. The CEO of MVIS is Sumit Sharma, a former Google employee, and he's a tech genius who knows the market and who's at the cutting edge of laser and microprojection technology and all of its applications. MicroVision has been around since 1993, so why is it making so much noise right now? Well, to understand the extreme movements out of MVIS, you first have to understand two things: what an at-the-market equity offering is, and what the semiconductor shortage is, and why it's impacting electric vehicle companies so much. MicroVision recently announced that it had entered into a $50 million at-the-market equity offering agreement. Basically, an equity offering is when a company decides to issue more shares so investors can buy them and the company can raise capital. However, what makes an at-the-market or ATM equity offering different from other kinds of secondary offerings is that it doesn't happen all at once. Instead, a company will look for a broker, in this case, Craig-Hallum Capital Group, to sell their shares over time at different stock prices following the movements of the market. This is a huge advantage over other kinds of secondary offerings because if you're the CEO of a company and want to sell more shares to raise capital, but you think your stock price is going to rise, you can start and stop the offering at any moment to take advantage of rising stock prices and make more money. The downside, as investors, to a company agreeing to an ATM equity offering is of course that it's hard to predict exactly when the company is going to receive how much capital, and therefore make investing decisions based on that. It's also risky because if share prices begin to fall, as it did over the past weeks for MVIS, you can wind up making less money through an ATM equity offering than you would have if you'd just done a traditional all-at-once secondary offering. MicroVision also recently made the massive announcement that it has all the parts it needs to make its April milestone of completing A-samples of its LRL sensor. Basically, an LRL sensor is something that MVIS has been working on for a while, and it's a huge step towards being able to make Level 3 and Level 4 autonomous vehicles. As we talked about during the NEO video, there are actually 5 levels of sophistication when it comes to self-driving cars. So far, most companies that make self-driving cars are stuck at Level 2. Level 2, or partial automation, is basically any car that can accelerate and brake itself and steer to keep you in your lane. Level 3 automation, which is what MVIS hopes its LRL sensor will help car companies achieve, is called Conditional automation, and doesn't really exist very widely throughout the car market yet. Conditional automation is the same as Level 2 partial automation, but it also includes some level of decision-making on the car's part and doesn't require a driver to keep their hands on the wheel in ideal conditions. So MVIS stock had a huge boom up until a couple of weeks ago because now they had a route to more capital. They were going to make an LRL sensor that could be crucial to cutting-edge autonomous vehicle manufacturers. And since their stock price was rising, the ATM equity offering they had in place was likely to yield quite a bit of liquidity to the company. However, last week's share prices of MVIS began to drop a little bit. This is mainly due to two things, the first of which is the semiconductor shortage. Semiconductors are a piece of technology that, like LRL sensors, are crucial to making self-driving vehicles. Because of the COVID-19 pandemic, unfortunately, there's been a shortage of semiconductors globally. This is good news for manufacturers of semiconductors because it means each unit sold will be more expensive, but it's bad news for any company that plans on using semiconductors, such as autonomous vehicle manufacturers like Tesla and NIO, as well as any company that relies on their business, like MVIS. The global shortage got really bad last week when an unprecedented freeze fueled by a weakening polar vortex hit Texas, causing large parts of its electricity grid to malfunction and halting production in many Texas-based semiconductor manufacturers. To make matters even more complicated, as MVIS share price began to decrease, investors began to see its ATM equity offering as a liability rather than an asset, as now it became less clear that MVIS was going to be able to raise enough capital if every additional share sold was sold at a lower and lower price. So where does all of that leave MicroVision? Well, it's important to remember that everything that caused its share price to drop last week are all just temporary problems. Texas will thaw out, production on semiconductors will resume, and when it does, MVIS will likely rise again. And because MVIS has that ATM equity offering in place, as its stock begins to rise again, it will resume being able to get fairly massive amounts of capital fairly easily, which will also fuel further stock price rise. MVIS is now trading around $19 a share, and it could go way higher than that. In the early 2000s, MVIS was trading over $500 a share, so it has a lot of wiggle room once all the problems in the semiconductor market sort themselves out. And remember, companies can choose when to use their ATM equity offerings, so MVIS can hold off until it's profitable to do so again before actually offering more shares and raising more capital. So MVIS will likely just wait until their stock price is up over where it was when they made the offering, and then start raising capital for a plethora of uses. This will push their stock price up even higher, and then when their LRL sensor is actually completed in April, I could see their stock price rising yet again. For all of these reasons, I think MVIS is a great buy. So guys, those are my thoughts on MicroVision. It's had a dramatic couple of weeks, but I'm optimistic it's smooth sailing ahead for this laser company. But what do you guys think? Is MVIS a bull or a bear? Let me know in the comments down below. If you like what you saw, remember to smash that like button, and subscribe and turn on notifications so you don't miss more videos. And I'll see you guys in the next one. See ya.